Do you own stock and/or bonds? Are you in your 30s, 40s, 50s, nearing retirement, maybe in your 60s or 70s, in retirement? Over the next 10 to 15 minutes, I'm going to try to give you a snapshot of where the markets have been, where they are today, and where they might be going in the next few years. Somehow, some way, you came across this video. It could be the most important video on the markets that you might see. Let me first introduce myself and timestamp this and explain to you in a minute who I am and who I am not. First, today is Sunday, October 29th at about 11:30 a.m. My name is Don Marshall, otherwise known as Bag of Don, at StockMarketCaddy.com. I am not a broker or a financial advisor. We do not make specific recommendations to buy or sell a thing. I am not a money manager. We do not solicit funds to manage. You could not pay me enough to manage your money. So you might be asking, then exactly who am I and what are we doing? We are a mentor for those folks who want to learn how to manage their own money, or maybe a portion of their own money. I invite you to visit our site, and if you have questions, you are more than welcome to give me a call at 813-758-8263. Let me just say this. If you have had a financial person over the last 10, 15, 20 years, and you are happy with the results that you've gotten, stay with them. They are worth their weight in gold. But if you are not, if you are going from person to person and you are struggling and you are not where you want to be over the last 10 to 15 years or over the last few years, you do need to do one of two things. One, find that person. I would only suggest that you make sure that person is a fiduciary. Or secondly, that you learn yourself with at least a portion of your monies how the game is played. Let's get started. First, going to show you the major sectors of all the markets, and we'll start with the S&P 500, the SPY. Then we're going to move very quickly the QQQs, the NASDAQ, the IWM, the Russell 2000, the Diamonds, the DIA, which is the Dow, the XLF, the financials, the KRE, the regional banks, XLY, consumer discretionary, IYT, the transports. If you're wondering what these symbols are, in case you own individual stocks, these are what we call ETFs, exchange traded funds. A rising tide will raise all boats. A lowering tide will lower all boats. If your favorite broker, the Edward Jones guy on the corner, has put you into a ton of individual stocks, that might be so that you're confused and you're less apt to pull your money from him. It is not necessary to be owning individual stocks these days. Again, a rising tide will raise all boats. A lowering tide, you can easily move money in and out of these sectors by using exchange traded funds. They're very cost efficient as well. Let's keep moving. We're going to show you gold, GLD, silver, SLV, oil, USO, and yes, the dollar, cash. Is cash trash? Or is cash about to go into its own bubble? Over the next few minutes, I'm going to show you again every one of these sectors in just a few short minutes, where it's been, where it is, and where it might be going. Okay, so let's get started. But before we do, let me share with you again, we do not make specific recommendations to buy or sell. We do not manage anyone's money. We are a mentoring site, and we trade the markets intraday, short term, managing our risk, staying very small, and trading the volatility and extracting cash flow. We're trading as a business, and we collect these things called dollars to put into other hard assets that will hold their value over time. This particular chart tracks money flow. It's called a three-line break chart. I don't have time to go into the education of what this chart is, but suffice it to say, green bars up is good, red bars down, not so good. The view that you see here goes all the way back 30 years. 30 years. This move down that you see is the crash, the dot-com crash. Maybe you were in the market then, maybe you were not, but it was devastating, and that's what it looks like. This move down was the depression of all time, worse than 1929, they said. This is the crash of 08-09. What is this? This is QE1, QE2, QE3, QE4, Operation Twist. This is Moab, the mother of all bubbles, as it ran actually up here to the overall top. See, the markets topped out up here. It's the S&P. Everything went up in a bubble. Everything goes up. The stocks go up. Bonds go up. Houses go up. Cars go up. Non-fungible tokens go up. Crypto goes up. Even that gaseous substance from Gwyneth Paltrow in a jar, that goes up. You see, when they did this, the dollar was going down. It was devalued. Nobody wanted to hold dollars. Nobody wanted to make dollars. Nobody wanted to save dollars. They just wanted to buy. Second homes, third homes, deploy the cash. It was a wonderful period. Let me back it up. Take off some of these markings. Where are we now? We're right here. Many people think that this is the top, a yearly top, and that we gave a little double top here. Can we come down to this low, to this low, to here? Or could we come all the way back? Now, I hope you'll stay with me, because you may be thinking, that's impossible. It would never do that. Well, let me remind you, the dot-com on a relative basis came down 80 and 90%. The 2008, 2009 gave up all of the gains that it had from 2002 to 2008. Could it do this? Stay with me. This is the same style of chart on the QQQs that I promised you. This is the dot-com, down 90%. This is 08. This is what? The bubble. This was the COVID. This is where we are now. Are we going back up to the highs? Are we coming here? Are we coming all the way back down? Let's go look at the IWM. This is the Russell 2000. Here is the dot-com. Here is the 08. This is the bubble. Look at the IWM. Is it headed down? The Russell 2000. These are all the small caps. Where is it headed and why? we're going to show you. Again, stay with us, but this is money flow. This is the diamonds, the Dow. You're getting the idea. This is 2000, 2008, and 9. Here is the bubble. Here is the first break. We're getting a little bit of a bounce. We going back up to the highs into the moon? Or is this just a sucker's trade for ultimately lower prices? Now, I'm going to show you another ETF that I forgot to mention earlier that is critically important. So I hope you're still with us. The other ETF is called the TLT. It's the bond market. The bond market. 10 to 12 years ago, the Edward Jones and Company and the money managers, they put just about everybody into a mixture of stocks and bonds. 60%, it was called the 60-40 plan. 60% equities, 40% bonds. They told everybody that this was smart, and for a while it worked. Is it working today? The idea was when stocks are running, bonds won't be so hot. But when bonds are running, when equities are coming down, presumably bonds will be going up. But you see, in a bubble, everything was going up. Everything. And it made the ability to discern value in anything next to impossible. This is a chart of the TLT from 08. This actually goes back further. Now I'm kind of cheating it a little bit. It looks wonderful, right? Maybe you owned back here in just 2019 the TLT. It was over $170 a share. Now what do you know? Over the last couple of years, interest rates have been rising. When interest rates rise, do bonds go up or down? Did your money manager, your financial advisor, did your Edward Jones broker tell you this? Did he keep you in bonds? If he did, it hasn't been pretty. Because let me bring into view what has happened. This is July of 2020. The bond market was trading at 170. It's now trading at 84. It has done what we call a full retracement. Let's see if we can bring this in. Well, the TLT itself, the TLT instrument didn't exist 30 years ago. Had it, we're all the way back. It has come back all the way. Now, does this mean necessarily that stocks will do this? No, but it's possible. Who would have ever thought back here when bonds are trading at 170 that something like this could happen? Now, we did. We told our members about this. So things can fall apart and fall apart rapidly. Let's keep showing you some other sectors because you might be looking for a place that isn't necessarily going down and you might be shocked. This is the XLF, the financials. These are the big banks. Very important sector if you own stocks. This is the all-time high. The banks are starting to struggle. Are they going to come down to the lows of 09? KRE, these are the regional banks. They topped out back in 2020. They are headed down. The regional banks are struggling. They can't make any money. You see, they borrow money short term and then have to loan it out. Who wants to borrow money at 8% or maybe 9% or 10%? Where are rates going? Now, if you think that interest rates are going back down to 2 or 3%, then yeah, all this, is going to resume back up to the highs. Let's look next at transports. These are key sectors. Why transports? If companies are starting to slow, they may not be transporting as much. Here is the IYT going back all the way to 08. You can see what's happening now. Transports are headed down. Maybe the companies aren't going to be able to ship as much product. Maybe we're headed into a recession. Maybe the damage in the bond markets is going to force hedge funds, insurance companies to maybe have to sell some of the stuff they'd rather not. Maybe they're going to be looking at the future earnings. And if we're going into a recession next year, the stocks may very well be headed much, much lower. And the financials, and the consumer stocks, and the transports. So what is holding up? Let's go take a look. This is the gold ETF. This is gold here. It has been holding up. Some say it's on the verge of breaking out. It certainly appears to us that gold is in an uptrend, headed up, maybe soon to break out. This is an ETF of silver. Yes, it had its bubble and it was going down. It's not terribly in favor the last 10 years. But as everything else is going down, silver appears to be headed up. This is on a monthly view. So it certainly looks to us that it's had its bear market and is likely headed up. We like to buy things when nobody else wants them. We like to sell things when everyone wants to buy. This is the ETF for oil. This was the bubble in oil in 08, and then oil cratered. Look at what oil is doing now, especially with troubles in the oil markets. We think oil is headed higher. It could be heading much higher. We could be in store for an oil shock. And if we do, what would that do to the economy? What would that do to your stocks? What would that do to your transports? And last, the UUP. Yes, an ETF for the dollar. The dollar. And they were telling you on CNBC that the dollar was trash. This is 2012 in here. Look at the dollar. It's headed up. It's trending up. Weren't they saying that cash was trash? No. You see, folks, the really smart money understood that it was a bubble. It was a bubble, a manufactured bubble. They were selling at the highs. They were collecting dollars. Everyone else in the bubble thought it would never end. The only thing, hopefully not you, that many of them were collecting was debt. Now, they've got to pay the debt back, not with cheap dollars, but with increasing dollar value. Many are going to learn a very hard and valuable lesson. It's going to be painful. And on top of that, if it happens en masse next year, a recession, the R word, their jobs could be at stake. And there's nothing worse than to have massive debt and no job. The easy money in the markets has been made. Most bull markets last 5 to 6 years. The last bull market that ended in 2020, and it's ending now, lasted some 12 years. It is entirely possible that we are in the stages of a bear market that could last over 4 years or more. So you've got to do a hard look at where you are. Where are you in your work career? Where are you in your retirement projections? And are you in retirement? Are you protected? Do you have a fiduciary that you can trust that has been able to maneuver you through these markets? Have you invested, if you are a younger person, have you invested in your education, your own education? Have you invested in developing other skill sets that you may need? I am Bagadon, and this has been StockMarketCaddy.com. I invite you to visit our site. We are not recommending that this is for everyone, but for those folks that like to go to the gym and work out and have a discipline and want to work on their own physical health. If you want to work on your own financial health, I'm here to help you maximize your time. I cannot make those decisions for you though. And we talk about here being versatile, diversified, not in what one owns, but in the skill set. Because you can make money when markets go down. Once again, thank you for sharing your time with us today. If you want to get more videos like this, feel free to subscribe. Feel free to push the like button. If you're getting it done with whatever it is you're doing and you have a good fiduciary, a good financial person you can trust, and they've been getting you through these markets over the last 10, 20, 30 years, stay with them. Again, they're worth their weight in gold. If you have a person that isn't getting it done, research, find someone, find a fiduciary, find a good, solid financial advisor to help you navigate through the markets. If you want to start learning to take a portion of your assets and to try your own hand, there are folks to do that. And we are as well. We are a mentor, a mentoring site where we like to teach other like-minded individuals like Susan and I did now some 20 odd years ago to trade in the markets mechanically and robotically, and to do so by minimizing and mitigating risk, can't be eliminated, and extracting cash flow. Trading stocks, ETFs, options, futures, even cryptocurrencies for financial gain. We wish you the best. Have a great rest of the day, and good luck, everyone.